Sure, sir. Good morning, one and all. Welcome to our revisionary series of sessions. Yes, Manivanan, very good morning, Bada. Yes, good morning, others. Very good morning to all. So, students, we are here to revise the basic, I'll say, the core report which costing prepares besides so many reports. In fact, this is the very basic thing for which costing is done, that is ascertaining cost and fixing or determining the price. Now for this, the report, the basic report which a costing prepares to determine the cost and price is the cost sheet. Now cost sheet is nothing but a pictorial, or I'll say a structured representation of your cost arranged in a proper sequence, and it is devised in such a manner that at every stage you get to know your cost, right from prime cost up till your total cost of sales. Please understand that cost sheet is different for different types of activities. Though you'll find that more or less the format is same, but broadly, if I have to categorize, I will say that broadly, one is for manufacturing, then for services, and then for other activities. Now, within manufacturing, you have job, batch, or single or output costing. The formats are more or less same for all these because ultimately they belong to the same category, that is manufacturing. Within services, the category which we have is called as operating costing, which is a separate chapter, so it is not covered here today. And within activities, again, you can have multiple, but most common is construction, for which you have a topic of contract costing. However, we are more concerned in this chapter with the cost sheet part of this. You can say more or less the cost sheet format of this is similar or very much nearing to the manufacturing part. Now, what is common between manufacturing and the construction activity cost sheet is we have a major component which is your material. And then besides that, we have the labor and the overheads component. Whereas in case of services, it is the other way around. The major component is your labor and your overheads, and a very minor component would be your material. Now, what we are going to cover over here is the cost sheets, which are majorly job, batch, single, or even the construction contract cost sheet. This is what we are going to cover here. Operating costing is a separate chapter, so it would be covered separately. So with this backdrop, let us go to the sums. Before that, anybody has any particular query in cost sheet, you may please feel free to post. We can take up your queries first. Not only cost sheet, even for that matter, if you want me to deliberate on any other aspect, I'll do that first. And then I will go ahead with your sums practice. Anybody having any particular query, doubt in any of this, please highlight. Students, anybody having any queries, doubts in relation to any of the topics, be it cost sheet or be it any earlier, may please feel free to raise. No? Great. So then let me start. Question one is a very basic question, but I'll first take up a question which will help us just revise the cost sheet format. So that could be our starting point. These are all selected from various resources that we have, MTPs, RTPs, etc. So this is the question. A factory uses job costing system. The following data is obtained from the books for the year ended 31st March. Material, wages. Now there is one more component which may be given, that is direct expenses, also called as chargeable expenses. Here it is not there because it is practically also not applicable in all cases. It may be applicable only in one of the cases. Okay. Now, besides that, the other components are, you are given the direct cost in the form of direct material, direct wages. Then you have within the overheads the selling, the administration, the factory, and you are given the profit component. Now, what is the requirement? You have to prepare a job cost sheet indicating the various elements of cost, prime cost, cost of production, cost of sales, sales value. Yes, just to update, besides this, you will also have stocks, the opening closing stocks. Again, it is not given in this sum. That is why I selected this sum, because this would be a starter for today. And then we'll go to the complicated ones. So my first aspect that is required in this question is the cost sheet, the job cost sheet. So let us start. So question 2, part 1. What we are preparing is job cost sheet. Now you have to use the terminology used. Many times they will call it as a cost statement. They may call it as a statement of cost. So whatever question says, you use the same terminology. Mention the period for which this cost sheet is prepared. If given in the sum, mention the production quantity of the cost sheet, that this cost sheet is prepared for what quantity. And if given, the job code, if it is a batch cost sheet, the batch code, whatever details are given, you should include that in your answer. This is, you can say, the formatting part. Let me just check if any of these details are given. No, none of these details are given except maximum for the period. So it is 2024-25. So this is a whole year cost sheet. Then in the format, you have your particulars. Now this is the standard format where you have the inner and the outer column. Though in this question, you will not require the inner column because there are no details relating to the inner column. Let me start. I'm just using the abbreviations so that we can solve all the questions today. So direct material, direct labor, that gives you prime cost. Then factory overheads. Now again, different terminologies may be used for this. They may call it as manufacturing overheads. They may call it as production overheads. They may call it as works on cost. These are all parallel terminologies that are used. Now this gives you either works cost or it gives you factory cost. Now, after this, we add administration overheads, but which administration? Which is related to production, if that is given. And after that, adding that administration overheads, which is related to production, what you get is your cost of production. In that, we adjust opening closing WIP and we get cost of goods sold. Now, since here stocks are not given, my cost of production will also be my cost of goods sold. And then in this, we add our administration overheads. These are general, that is not related to production. We add our selling and distribution overheads. And what we get is our total cost in simple terminology, or most appropriately, it is cost of sales. So this is, you can say, a broad format of cost sheet. More additions would be the stock variations whenever given in the question. So we serve the first part of the question, which is preparing a job cost sheet. So 18 and 15. Amounts are rupees in 1,000. So this is 33 lakhs. So we have also derived the first figure that they have asked for. Then you have the factory overheads, which is 9. So this becomes 42. Administration given is not related to production. So this remains 42. Then general administration 840, selling 1050. So 18, 60, 90. So I get my total cost as 60 lakhs, 90,000. Now, they have also given me profit and they have asked for sales value also. Okay, so I'll add up the profit. And I get the sale value. So this will be 727308. Fine, students. So we have catered to the first part of the question, which was basic. This may carry around 2 marks maximum because it was very basic. Now, what is important to note is the second part, which is the actual costing part. So this is my cost sheet for the year ended 31st March 25. That is for the entire financial year of 2024-25. Now they are asking for the next year. Now the next year is 2025-26. What it says, the factory received an order for another job. It is estimated that the direct material would be 480, direct labor would be 3 lakhs. Fine. Now, you are required to do what? You have to find out what should be the price for this job if the factory intends to earn same rate of profit on sales. So what you earned in this current year of 24-25, you wish to earn same rate of profit. Further, assuming that selling distribution overheads are going up by 15%, the factory overheads, how it is charged, it is recovered as a percentage of wages. Okay. Other overheads are recovered as a percentage of cost of production based on cost rates prevailing in the previous year. So this is the hint which they have given you as to how you have to recover or how you have to charge your other overheads. Correct? Now, in order that I prepare the cost sheet of the second part, I need to first determine the overhead absorption rates, which if you remember in our previous class itself, when we were revising overheads, we name it as ORR, which means overhead recovery rate. So these are parallel terms: overhead charging rate, overhead absorption rate, overhead recovery rate. How is overhead recovery rate calculated? it is your estimated overheads upon your estimated base. If this base is also in rupees, then you multiply this by 100 so that you get it as a percentage. Now, firstly, for factory overheads, it is estimated factory overheads upon estimated direct labor because they have asked us to take the wages as the base. Then for administration overheads, it is estimated administration overheads upon estimated, I think they said cost of production. Other overheads, percentage of cost of production. Yes. COP into 100. And similarly, selling and distribution overheads, it is estimated selling and distribution upon estimated COP into 100. Besides this, we find out our calculation of profit percentage on sales because we have to maintain this also as per the requirement. So profit percentage is equal to profit upon sales into 100. Let me now fill in the blanks. So my factory overheads is 9 and there is no change which is expected. So we estimate that the factory overheads remain same. My works, sorry, it has to be on direct wages. 15 lakhs. So this is my first percentage. Kindly help me with that. Till the time I fill in the blank other figures. So this is 840 upon 42. This is easy. 20% it is. Then 1050 upon 42. 42 divided by 4. So this is 25%. Yes, Ishan has given me. Ishant is in fact asking me, sir, selling and distribution का base COGS नहीं होता क्या? See, Ishan, understand one thing. Base is my choice. I can take cost of production. I can take, as you suggested, COGS. I can even take sales as the base. If nothing would have been given in the question, it was your prerogative, your choice to take one of the bases and it is acceptable. But since in the question they have specifically asked, you should go by their base only. So if you recall your overheads chapter, you will find that there are optional or alternative bases suggested. You can select any one of them when you are doing costing. Here we go by their basis because they have already suggested. Correct? Okay. Manivanam has given me the percentage for factory overheads as 60. No, Rag is also giving me 60. Great. So this is 60. And then final is my profit percentage. Sorry, one mistake I committed here. This cannot be 25. Why? Because they have given me some inflation. What is that inflation? See, assuming that the selling overheads have gone up by 15%. So before I find out the rate, I have to add 15%. Now you find out the rate. So 1050 is of previous year, but in the next year it is expected it will go up by 15%. So 1050 plus 15% and then divided by 42 lakhs to find out your rate. Okay. In the meantime, some of you may just help me with the profit percentage also. So we expect to maintain the same profit on sales of 7308. Has given me the percentage of S&D, that is 28.75. Okay, he has given me even for profit 16.666. So 16.666 and 28.75. So we are done with all the workings. Now we prepare the job cost sheet for the expected job. Now again here no details are given as to the quantity and all. So prime cost, factory overheads, directly it is factory cost, or now I'll say cost of production because we do not have the administration related to production. Then you have the general administration, you have selling and distribution. This will give me COS. In that, when I add profit, I will get my estimated sales value. Anurag has given something. Okay, he has also given me the percentages. Fine. So let me 480 is material and 3 lakhs is labor. $780. Factory overheads was 3 lakhs into 60%. That is percentage on your wages. So it comes to 180, correct? I get 78960 as my cost of production. Administration overheads is 960 for 20%. So 18,120, 192, correct? And again 960 ka 28.75. Kindly help me with this figure. Now profit is 16.66%. Profit is 16.66%, which is equal to 1/6 of sales. Now, students, I hope you all remember the maths. If it is 1/6 of sales, it should also be 1/5 of total cost. Correct? So 1/6 of sales is also 1/5 of cost. So once I get my total cost, I will be able to find out this conveniently. Yes, how much is 960 into 28.75%? Students. $276. Correct. Anurag has also given me the same answer. Manivaran has given me the same answer. So it is 276. Okay. So total is 3,468. 468. 1428. And then profit will be 1/5 into 1428. So how much is this? 1/5 of 1428. Anurag. Yes. 1428, 1/5 is how much? 285,600. Anurag. Manivanan. Yes. So it is 285. The total is 16,700. 1513.6. So this is our final answer for this question of cost sheet. Fine, students, clear to everyone? Great. Chalo. Once this is done, let us move ahead. Now, the next sum is a question for construction cost sheet. So first one was job cost sheet. Now this second one is construction cost sheet. Let us go to this second question to understand what is the nuances. Leading engineering construction company providing a range of infrastructure industrial services. They have been asked to quote for residential building RCB and industrial plant IPC. Okay. However, they are winning fewer RCB contracts than expected. Okay. XYZ Construction has a policy to price all jobs at budgeted total cost plus 50%. ठीक है. Overheads currently absorbed on labor hour basis. ठीक है. The company believes that switching to ABC to absorb overheads would reduce the cost associated with RCB and make them more competitive. Okay. So this is a cost sheet comparing with ABC, which we recently did in the previous class. You are provided with following data: overheads and the drivers. Okay, so they are also giving you the overheads with the drivers. For a typical RCB, material cost is 5 lakhs, labor is 1200 hours, sites, 2 visits, planning documents. Okay, 2 documents, fine. Similarly, for IPC, material cost 12 lakhs, labor hours this, site visits this, planning documents 8. Labor is paid at the rate of 100 per hour, fine. Calculate the cost and quote price of RCB using labor hours to absorb the overheads. Okay, that is a traditional method. Calculate the cost and quote the price of RCB using ABC to absorb the overheads. Assuming that the cost of an RCB falls by nearly 7% and the price of an IPC rises by 2%. Okay, as a result of the change to ABC, as a result of the change to ABC, suggest possible pricing strategy for the two services offered by XYZ Construction. Additionally, suggest two reasons that other than high prices for the current poor sales. Okay. So what is this third part? Assuming that the cost of an RCB falls by 7% and the price IPC rises by 2% as a result of the change to ABC. Okay, okay. So we first prepare cost sheet. For preparing cost sheet, we have to also find out our charging rates. Okay. Question 3, part A, traditional approach. Now we first find out our ORR. It is estimated overheads upon estimated labor hours, because their method is to recover overheads on the basis of labor hours. Correct? That is a method, na? Yes. So this is what you get. Estimated overheads is 120, 80, 400, 600 lakhs. And the estimated hours is 50,000. So it is 600 lakhs divided by 50,000. Rupees 600 lakhs divided by 50,000 labor hours. So you get your ORR. Just help me find out this. How much is your ORR? In the meantime, I'm preparing the cost sheet. So it is particulars and your two construction projects. One is residential, the other is industrial. ठीक है. Amount rupees in that we will decide after looking at the data. So Manu has given me 1200. Acha, you are talking about ORR. Anurag has also given me 1200. So this is 1200 per laborer. ठीक है? Let us now proceed. 5 lakhs, 1200 hours. Okay. We can take it rupees in lakhs. So direct material, direct labor, this will be prime cost. And then we charge entire overheads by this labor hours into rupees 1200. Your wages are also charged by the same formula, labor hours into, what was the labor rate given in the question? 100. Okay. Material cost 5 lakhs, 12 lakhs. Labor hours 1200, 2500. So 5, 1200 hours, 2500 hours. Correct? So here this 1200 is multiplied by 100 to find out labor cost. And here the same labor hours are multiplied by the ORR which we just calculated, which is 1200 rupees per labor hour. This gives me my total cost. To this, I add profit to get my price, which I need to quote. Okay. So how much is 1200 into 100? It is 1.2 lakhs, if I'm correct. And 2500 into 100 is 2.5 lakhs. So this becomes 6.2 lakhs. And this becomes 14.5 lakhs. Correct? Then overheads, 12 12s are 144. 144. So it becomes 14.4 lakhs. Similarly, 25 into 10, 25 into 2 is 5.5 plus 5 is 30. So 30 lakhs. Just cross check, students. So it is 20.6 and it is 44.5. What was the profit? It is total cost plus 50%. Oh, huge margin. So it is total cost into 50%. $22.25. Correct? Yes. So my price is 30.9. Perfect, students. RBC, Anurag is giving 20.6. Manivan saying correct, sir. Okay, great. This is our part A answer. Part B will be under ABC approach. So here again, we need to find out the driver rates. If you remember, how do you find out the driver rates? Simply, we do this working. Activity, cost pool, cost drivers, and the driver rate. That is the ORR. Now, what are the activities which are given in the question? Supervisor, project planner, property related. Supervisor, project planner, and it is property related. Huh. 30.166. Yes, Anurag, same answer. So cost pool is 120,8400. 400. Call drivers are 600 site visits, 300 documents, 50,000 hours. 300 documents and 50,000 hours. When you divide this, you get your driver rates. Here my driver rate will be per visit. Here it will be per planning document. And here it will be per labor hour. Correct? Now I again prepare the cost sheet under the ABC approach. Same, we consider amount rupees in lakhs. Particulars, RCP, IPC, direct material, direct labor, prime cost. This you can simply copy paste from the previous cost sheet because that will not change because we are doing costing for the same two construction projects. So it is same. What only changes is the overheads, that is support cost, which would be charged activity wise. So first is supervision activity, then your project planning activity, and your property related activity. Now, supervision activity, the charging rate, what we get, will be charged on the basis of visits, into documents, and into labor hours. Correct, students? Hope you have calculated this. The charging rates. Kindly provide me the charging rates. Yes, Manivanan, Ishant, Anurag, others who have joined late, but you can simply use your calculators and help me calculate. Shipimol, Apurva, Pavitra, all of you all who are present. Pinchana, Pratmesh, Sanju, help me with the calculations. So it is rupees 120 lakhs divided by 600 visits, rupees 80 lakhs divided by 300 documents, 400 lakhs divided by 50,000 hours. Manivanan is saying 20,000. Okay, this I think you're talking about this charging. This I think will be 26,666. I think you're talking about this 0.66. And then Sheffy has given me 24,000 document. 24,000 because here it is. But you have multiplied, you have to divide. So this is 800, correct. Right? Now we use these rates to charge here 20,000, here 26, 666.66, and here 800. Now, 1200 hours, 2500 hours. So this multiplied by 1200, this multiplied by 2500. Site visits 2 and 10. So here multiplied by 2 visits, here multiplied by 10 visits, and then planning documents 2 and 8. Okay. So once you do that, you will get the total cost, to which you add your profit at the rate of 50% of total cost, and you get your price to be quoted. Okay. Fine, students. So this is how you will charge. So 20,000 into 2 will be 40,000. 20,000 into 10 will be 2 lakhs. Then 26,666 into 2 documents will be something approx 53, I'll say 53,000. And 26,666 into 8 documents. So 54 by 24, 3s are 12. 8 3s are 24. Roughly this, correct? 2.13. Okay. Then 800 into 1200. 12 8s are 96. Seven, three, three. But you all are just posting figures. How will I understand it relates to what? Manivanan, beta, you have just posted figures. I will not understand you are giving figures for what. So 800 into 2500 is 20 lakhs. Correct? These are my costs. So it is 6.6, it is 7.1, it is 16.73 roughly. Manivan, give me what your figure represents. Shifty Mall is saying total cost. Again, Shifty Mall, total cost of what? Because my total cost is coming as this 14 and 2, 16 and 2, 20 and 20 and 20, 40. So it is 40.63. Anurag says 16.73, 38.63. This is 38. 4 and 2, 16 and 2, 18. Yes, 38. And then adding 50% for the profit component. Three, 7. So 24, 25.10 roughly, and it is for 57.9495. So these are my costs as per the ABC approach. So this is how you will prepare the cost sheets under both the approaches. Understood, students? Now the C part is what you have to give your opinion. Correct? What it says, assuming that the cost of an RCB falls by nearly 7% and the price of IPC rises by about 2% as a result of change to ABC. ठीक है? Suggest possible pricing strategy for the two services offered by XYZ construction. Additionally, suggest two reasons for other than high price for current poor sales of RCB. See, now this is more like you can say a theoretical answer. So what will be your answer? They are saying if the cost of RCB falls, what will be your pricing strategy? Now for this, you have to recall in the question in the above part, they had said that we are not getting RCB contracts. I remember reading that. They are winning fewer RCB contracts than expected. Now, since you are winning lesser contracts, and because of using ABC in your company, you're expecting that the cost of RCB will go down. Anyways, we have got a lower cost of RCB under ABC approach because of more appropriate apportionment of the overheads cost. But besides this, also they are saying that the cost of RCB would further come down because once you start adopting ABC, you make those changes. And when you do ABC management, that is activity-based management, it will definitely reduce the non-performing activities or the non-value adding activities. And once all those non-value adding activities are removed, this will happen once you use ABC for costing and cost control, automatically your overall cost will come down. Now they are saying already your cost is reduced because you are getting more appropriate cost, which was coming as 20.6. It is already coming as 16. So around 40% decline in cost only because of using the right approach, plus further 7% decline because of activity-based cost management. In this particular case, what should be your pricing strategy? This is what is asking. So our pricing strategy should be penetration pricing. What is students penetration pricing? Penetration pricing is a strategy where you'll find, like I'll give you the best example of Geo, that initially to capture the market, to penetrate into the roots of the market, what they did was they offered the services at a very low price. Rather, in fact, if I'm not wrong, they started offering free. And then as each player got removed from the market, first BSNL got eliminated, then private players got eliminated. Today, you will find you are only having Airtel as a competitor to Jio, and the other two who have merged and become one unit, which is your Idea and Vodafone, which is now V. So this is because of the penetration pricing strategy of Jio, whereby they lowered their prices at the initial stage to capitalize the market, right? So since you are getting fewer contracts for RCB and now your ABC approach is going to give you a proper costing where RCB is having a lower cost, you should use the penetration pricing whereby you will reduce your selling price to such an extent that you may only recover costs in the initial stages. So reducing this will mean bringing it to 16.733 as low as this instead of 30.9, or only adding a very nominal profit 10% just to make it somewhere near 18 lakhs. This will still be much lower than 30 lakhs which you are quoting. So definitely it will increase your chances of getting the contracts. And once you start establishing your market in that particular segment, then slowly you can add up the price every year on year some by adding some profit percentage, and you can come to your original pricing. But that can be done slowly once you start getting the RCB contracts. This is what you can suggest in part 3 about the pricing strategies. Now they are asking for both the services. Now what should be your pricing strategy for the other service? Now if you see for IPC, we were already getting IPC contracts. Plus they are further saying that the price of IPC rises by about 2%. So there will be in fact furthermore increase in pricing. Now what should be your pricing strategy? So here I will say that we can suggest the premium pricing policy over here. What is premium? Premium pricing is opposite of penetration, right? It is also called as a skimming pricing. So what is this premium or skimming pricing? Where you have a product, like I'll give you example of this also. The example of this is iPhone. Despite of having so many computers, since iPhone has a repute, it has a recognition, what iPhone does is it keeps its price at premium. And despite of that, people queue up whenever a new product is launched. So this is what you can do for your IPC. So since already it is commanding contracts plus there will be 2% increase in price. So you should not lower that price. You should keep the IPC price at its full premium so that you will be getting the contract. Now, interestingly, our ABC is giving us costing of 57.94, but I was already getting contract with my previous costing and pricing of 66.75. So this becomes premium for me because my actual now price as per ABC is coming as the correct price is coming as 57.94. Already because of ABC and cost controls of ABC, I have able to achieve reduction in cost. But still, because it is a selling product, I am having market and plus there is going to be further increase in pricing. I should maintain my price at premium. That is, I will adopt or continue adopting this price for IPC because I was still commanding the contracts at this price. So this, according to me, should be the answer for part C. Is this clear? Now further they are questioning, additionally, suggest two reasons other than the high prices for the current poor sales of RCB. Now they are asking, what could be the probable reason why RCB was not getting materialized? That is, you are not getting the RCB contracts besides the high price. What could be the reason? What could be the reason for RCB having poor sales? And they want you to suggest the reasons other than the high price. Okay. As per the data, I'm not getting any inference as to what could be the other reason. So where there is nothing suggested from the data, you should give generic reasons like what could be the other two reason. One, it would be because of slow market. Like as you can see, many times it happens that post-COVID, we have this reason that since money is less and people are short of money because of COVID, or you can say another reason as the overall market scenario, or the other reason is the geopolitical international situation where there are multiple wars. There is still uncertainty about what stand America will take on various things. So these create uncertainty. Yes, one more reason suggested by Manivanan is time of completion and less attention on project by management. Perfect. You can give this also as the reason. So when nothing is coming out from the question because they have not given any such data suggesting what was happening in RCB. So we only have the cost data and they do not want our reasons basis cost. So then you can give these generic reasons like market conditions, international condition creating instability, insecurity feeling amongst the buyers, plus, as Manivan suggested, maybe because from your side less attention was given to these projects, so they were not getting completed, giving a bad repute to the company and the project. So these can be your reasons. Fine. Anurag is saying, can it be change in market demand shift? See, Anurag, that is always there. No? That's why I'm saying. But shift to what? Because see, RCB is doing residential. Residential is something which is required by everyone. It is a basic necessity. So when you are saying change in market demand, shift to what? That will be the question. Na? It is what I understand is we are not selling, but somebody else is selling. So it is not that the market demand is not there. The demand is there. We are not having demand or we are not able to satisfy the demand because of our inefficiencies. This is what I understand. Correct? Okay. Okay. Let us proceed. Lux Limited is into luxury pens business, manufacturing 120 pens in a batch. To process a single batch of 120 pens, company needs to incur following expenses. Okay. So they are manufacturing pens in batches. Each batch is having 120 pens. Okay. So what are the expenses? Now this is expenses for 120 pens. You have to keep this in mind because it is in batches. Okay. Material, labor, and the batch setup cost. So this is a question of batch costing. So we did one of job, we did another of contract. Now we are doing the third type of costing or the third type of cost sheet, which is of batch. Let us then proceed. So now when it is batch, you will see this particular type of cost, which is not there in other cases, that is the batch setting up cost. Now, this cost is incurred only once because this is incurred per batch. So if you are manufacturing more pens in the same batch, this cost will remain same. So this is a type of semi-variable cost which remains constant as per a particular situation like the number of batches. It will vary with the increase in number of batch. If you increase the number of pens in the same batch, there is no change in the cost. So to that extent, it is fixed. But more number of batches you produce, this cost is incurred per batch. So to that extent, it is variable. Now, what is given? For each batch, the company absorbs production overheads at the rate of 20% on wages and 15% of total production cost is allocated to cover the other overheads. Okay. During the month of March, Lux Limited received an order for 2,400 pens, and the company aims to achieve a profit margin of 25% on its sales value. You are required to determine the sales value of 2,400 pens. Okay, good. Now, when we are saying 2,400 pens, it will be how many batches? Because our batch consists of 120 pens. So 2,400 should be 20 batches, correct? Yes, Manivanam, Ishant, both have given me same answer. So it will be 20 batches, correct? Shifimol has also given same answer. ठीक है. So question 4. Batch cost sheet. Now here our cost sheet is of 20 batches, which makes it 2400 pence. Correct? Fine. Now we are given direct material. We are given direct labor. This will become prime cost. In this, we will charge our factory overheads. Rates are given, so we need not calculate the rates. This will give me factory cost or your cost of production. On that basis, we will charge our selling, distribution, and administration overheads. Again, the rate is given. So this will give me my total cost. No, I have to also charge my cost of the batch, correct? It should come here because it is like a direct cost for me. So it is not at setting up cost. Fine. And then I will add my profit margin. Now, direct material, how much was given? They had given me 57,375, which was for one batch of 120 pence. So it is 57,375 into, now we are making 20 batches. Then it is 6750 again into 20 batches. And again, this is 18,900 20 batches. Ishant has given me something. Acha, he's giving me the answer. So it is 1147.50. So less 1147,500. Yes. Okay. Shifty Mall says 1147,500. Then Shifty Mall again says 1,35,000. Okay. Manivanan 1147. Yes, that is done. Manivanan. Yes, and Anurag gives me even the batch setup cost. He says it is 378. Correct. Now, how do we charge factory overheads? It is 20% of direct wages. How do we charge selling, distribution, administration? It is 15% of production cost. And then profit margin. How much it is? 25% of sales. 25% is 1/4. So on cost, it will be 1/3. Correct? Chalo, we will do this. So Anurag has given me prime cost 1660,500. Let me just cross check 11, 12, 12 and 3, 15, 7, 7, 7, 14, 14 and 0. So 2, 16. Okay, perfect. Now operation has reached to sales value. Let me be step by step bit for the benefit of all students. Good. Apurva is giving me factory overheads. Apurva, is it only 27,000? Just cross check. Somehow I feel it is very low, but it is 13, 13, 27. Yes, you are right. It is 27,000. So 1660 plus so 16, 87,500. So 1687,500. Now we have to take 15% of this 1687,500. He's saying it is 253, 125. Apurva says 253. Ishan says the same. Anurag same. Shifimal same. Okay. Manivanam same. Great. So I've reached up to this point. So this is 19, 13, 14, 4, 0, 6, 2, 5. Right? Now we have to take 1/3 of this to find out the profit margin. Yes. So again, Apurva is giving me the profit margin as 646,875. Okay. 646,875. And then 19, 6, 8, 6, 25. Okay. So this will be 25, 87, 14, 15. Correct? This I think Ishan had given me long back. 25, 87, 500 Ishan. Perfect. Right. Manivan gave me same. Pipimal gives me same. Super. So students, this is how we find out our answer. Is this right? Clear to all? Right? So let us go back and take up a conceptual sum. Till now we were doing a lot of mathematical sums. So let me take you to question 1. What does question 1 says? From the following data, calculate administration, selling, distribution. So basically in this sum, we have to categorize the expense into these 3 categories. So I give you 10 minutes. I'll also take a short break. In that, identify the items, categorize it into administration cost or selling cost or distribution cost, and make a total. Fine. I'll give you 10 minutes. So I have still only one answer from Ishan. What about others? Yes, Shippy Mall gives me one answer. So let us identify, students, what is falling where. So basically, this is part of the extended or the full version of cost sheet, where the overheads are not given as a percentage, rather they are given as description of cost, like you can see here, in which you need to classify the overheads under the right category. So we have production overheads, we have admin, we have selling, we have distribution. Now in this question, they are not asking to you to give the figure of factory overheads, but there are some expenses which deals with factories. We'll first identify them. What expenses are under which? So rent paid for factory building, correct? So this has to be factory overheads. Office staff, this has to be administration overheads. Auditors, I believe auditing should also form part of your administration. So this should also go auditors fees. In fact, this is our own fees. We are generally the auditors, so it is again going to administration. Then salary paid to sales manager, obviously this is selling. Vehicle hire charges paid for directors, okay, admin. Wages paid to workers engaged in storing goods at sales depot. Uh, Selling or distribution? I believe this is distribution, because the workers who are working at the depot is for distribution, correct? So this has to be distribution. Next, traveling allowance paid to sales staff, selling, no doubt. Cost paid for secondary packing. Now see, primary packing is the packing or the wrapper on the product. Secondary is the boxes in which the products are placed for the purpose of delivering it. So this is distribution. Electricity bill paid for sales office, selling. Depreciation of goods, delivery vehicle. Okay, so delivery vehicle again distribution. Bonus paid to sales staff for achieving the targets. Definitely this is selling. Fees to independent directors, administration. That's it. Murad says, but it is mentioned sales depot. See, but as sales depot means depot is sales depot only. Understand one thing. What is the difference between selling and distribution? Selling is, in other terminology, I'll say marketing. That is making the product known to the customers and getting the orders. This is according to me selling. Distribution is now making the product physically available to the customer. So for that, whatever are your expenses to reach to the customer, to make your product reach to the customer is according to me distribution. So I believe still that sales depot, see, it is a depot, sales. Everything with the word sales cannot be selling only. See, don't go by this that where the word sales will be used, it has to be selling only. If we have to see the intent, in fact, that is why many times since there may be a thin line of difference, so that is why you will see in majority questions they merge selling and distribution for this reason only, right? So this is my understanding. See, one or two will always be subjective. Someone may classify it in administration, someone may classify it in selling, someone may classify it in production. And I personally believe that if it is of the staff who is working in depot, my understanding is depots are for distribution, correct? Because we open depot in a particular area or a city. Like even today, what is the today's this online model? They are having these dark warehouses located nearby to your locality, wherever they have to distribute the goods in time. So fine, but it is subjective. I'm more on the distribution side, but okay, we can even consider the selling part. Sir, isn't secondary packing a separate category? No, beta. What is category? If you're saying it is a separate category, Shifimol, tell me what you will categorize it under. Which special category? See, we have production. What we can further bifurcate is research and development that you can do. Then you have administration. What we can further bifurcate is administration for production, administration for general. And then you have selling distribution where you can further bifurcate as selling separate, distribution separate. Besides these categories, I don't believe that there is any other category in the cost sheet where any of the expenses can be classified. This is my understanding. Still, if you feel, let me know which category we can consider this under, right? Because according to me, cost sheet format does not have any category except these six, which I just mentioned. So let us then go ahead with this with one obvious answer, which is difference between me and I think Ishan. Subject, it is subjective, so it is okay. So we add up. We will not consider this because they have not asked us factory overheads. So adding up this plus this plus this and this. These four will add up to make my administration total. Then this, 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 and this. This will add up to make my selling total. And the remaining unmarked, or okay, I'll put tick mark. This will add up to make my distribution total. So underlined ones are administration, circled ones are selling, and tick mark ones are distribution. And this box you have to ignore because they have not asked the factory amount. Anurag says, okay, so as per this, Anurag is giving me the total. It is 10, 24, 200. Then selling cost 907, 400. Anurag, I believe it is as per my understanding. 907, 400. And distribution 28, 400. Okay. So these are our answers, students. Yes, Manivanan has also given me same answers. So it means it is confirmed. Right. Super. Great. Let us proceed then. Once this is done, all clear to everyone. Let us first go to sixth. Now this sum is also interesting. The reason is that if you read the question, it is straightforward. There is nothing in the question as such, right? But when we start solving, we suddenly get stuck up in this. Why we get stuck up? Because the first reason is everything is given as a percentage. So all figures are there, but they are percentage of some other cost. We only have one complete value, absolute value, which is the profit, right? Now, when you read the sum for the first time, it appears to be plain vanilla sum. But once you take up for solving, you see the challenge. Now the challenge is, as I said, that all are percentage. You cannot prepare a cost sheet with percentage because that will not be correct because the percentage are linked to different bases. But we have one figure, absolute figure. So first thing in this question is that this absolute figure will become your starting point. But then that is not the end. As you proceed, you find that there is some other issue also that will identify once we start solving. So this is sixth question, correct? This is a unit cost sheet sum. So now this is again another category, that is the unit cost sheet. So direct material, direct labor, direct expense, factory overheads. Again, there are no stocks, so I'm not including the stock details in the cost sheet just to avoid the complications. This is factory cost. Then administration related to production. This is my cost of production and cost of goods sold both because there are no stocks. Then again, I have admin, which is general. I have selling distribution. This is COS. Then I have profit. And I will have sales, which is obviously per unit here because this is the unit costing. Okay. Now, I have the only sole absolute value, which is 750 profit. Correct? Now, this becomes my starting point. So they have given 750 per unit profit. And also, in order that you are able to derive other values, they have also given you the percentage that it is 15% of sales. So this 750 is 15% of sales. So I will get my sales as 750 divided by 15%. Correct? Na maths. So since 750 is 15%, so how much will be 100%? So I think 17 5 5s are, yes, 15 5s are 75. Correct? Na? So I think it will be 5,000. Yes, Manivanam has given me the answer. Shefimol has also given me the answer. So 5,000 is my sales or selling price, right? Fine. Now then we proceed. So the amounts are rupees, absolute, nothing else in that. Now when I proceed, I find that two of my costs are linked with selling price. So these two I can find out: direct material 12.5, direct labor 17.5. So 12.5, 17.5, correct? Now both are percentage of selling price. So I multiplied by selling price to get my answer. Okay, Shifimol says direct material is 625. Yes, we can now find out all these values. How much would be direct labor? Apurva says 875. 875. Okay. And Manivanan has already given me the prime cost, which is 1625. Is it 16? What is this 1625, beta? 1 second. Direct expense is not given. According to me, this is 1500. What is 750, beta? Okay. Now, what else is given? Production overheads is 1/3 of prime cost. Excellent. So this is 1500 into 1 by 3. So 500, I get 2000. Administration overheads, which is related to production, is 50% of cost of production. Oh, so general is not there. This is 50% of cost of production means the next figure, which is not there. So how much it will be? It is 50% of cost of production. That is the next figure. Yes, Nandakishore. Correct. Give me the value. How much would be my administration overheads? It is given 50% of the next value. See, I'll use simple maths. Let this value be 100. It is not known, na? So let it be 100. Now it is already given that this is 50% of this, so it will be 50. And since both these values add up to make 100, by default, factory cost will be the balancing figure, which is 50. Only then this will add up to 100. So simple maths, I assume this as 100. So I got this as 50 and this is the balancing value. Now I get that whatever is this value, which is representing 50 in the equation, will be also the same here because that is also 50 in the equation. See the use of maths, simple maths. We do not require any technical maths, at least in the cost sheet subject. Now the interesting part. I also have some figure here. If I go backward, I get this as 4250. And when I'm coming forward, I'm getting this as 4000. So I get an interesting point, which is the balancing figure 250. And this is how my cost sheet will get completed. Ishan, you can assume X, but then for that you need a working. Na? I think my approach is very simple, straightforward. It is in fact a similar approach, but instead of assuming it X and taking it in the working note and solving that X and everything, which will even consume your 2 minutes time, I think this assuming 100 is much faster and easier. Correct, na Ishan? Yes, Shifimol, right. So when I came forward, I reached here 4000, but when I go backward, I get 4250. So what I get to know is, sorry, is my audio video going well? Manish ji, Manish ji, is my audio video going well? Because my video is stuck at my end. Yeah, now it is fine because at my end it was stuck. Okay, okay. Somebody is saying Ishan, but sir, ICAI wants to know detailed explanation. See, beta, ICAI never demands unnecessary explanation. So this is what you can show here itself. Or if you want, you can definitely do it in the working note. That is fine. So what I can do is simply here, since this is 2000 is 50% of COP. So I get this equation that it is 50% of COP. So by default, factory cost is 50. So you can do it here itself, Ishan, not a problem. But if you want, you can definitely go and do it in working note. But unnecessary explanations not required because I think this sum will carry hardly 3 marks, 3 or 4 marks. So we have to also decide how much time we invest in the exam to solve this question. So my understanding is this. Fine, students. So you get a missing value, that is selling and distribution overheads, rupees 250. Now, let us take up another question, question 7, which appears to be small, straightforward. But again, when you start solving, you find something which is there in the question. So this is a question of job number Z201. The period is the month of February 21. Material consumed 40 lakhs, factory wages 2750, direct expense for the first time we are getting in a question 1250. Now, what are they asking? No, they are giving you the figure of works on cost. They are saying it is 20% of works cost. Office on cost means administration overheads related to production, 40% of cost of production. Selling distribution on cost means selling distribution overheads, 25% of cost of sales, and profit is again 25% of sales. Okay, so these are the details given. Appear to be a straightforward question. Let's see. Question 7. Job cost sheet period is Feb 2021. Job number is Z201. Articles. Okay. My material consumed 40 lakhs. Factory wages 2750. Amount rupees lakhs. Direct expenses 1250. Prime cost 40 and 40. Correct. Students, works on cost. So the terminology is used by them. So what I get is works cost. Then they have used, I think, office on cost. Yes. In office on cost, that is administration overheads, it's not there because you are already given administration, which is related to production. And then they have used a term, if I'm not wrong, selling on cost or selling and distribution overheads. Then we have profit. So you get sales. Okay, good to go. Now, what they are saying, works on cost, that is factory overheads is 20% of works cost. Now, This figure is 20% of the next figure. That is what is the challenge. So how will you solve? Yes, students, how will you solve? Says yes. Again, the first option is assuming it to be x. But I will again tell you, students, wherever possible, see if there can be another approach. Yes, Nanda Kishore. So again, I'll follow that approach which I explained to you in the previous question. Let this be 100. So this becomes 20 because it is given as 20% of works cost. And by default, this balance is 80. So once you get this equation, then you can easily find out the answer. This is given, which is equivalent to 80. So how much is 20? So you get this, right? Again, office on cost, which is a production related administration, it is 40% of cost of production, correct? Yes, sir. That's why I'm saying I also feel that my video is getting stuck in between. That is what I mentioned last time because when I'm seeing myself, but my voice is clear. Voice is clear. Maybe, sir, some connectivity issue. You tell me if there is some problem in my voice, I will repeat anything. If so. Okay. Video. Yes, that is what I checked last few minutes back with you. ठीक है. Okay. Where were we? Yes. So office on cost is 40% of cost of production. Now again, this is given as 40% of this, right? Again, how to solve? Same approach. Let this be 100. So this will be 40. Now this will be 60. Correct? So again, what I get is this figure is equivalent to 60. So how much would be 40? Correct, na? So this figure is now equivalent to 60. So how much would be 40? I believe it will be 6666. Please confirm, students. Our figures are, I think, rupees in thousands, not in lakhs. Yes, Manivanan. Yes, Shifimol, Anurag, right. So now then again, what is given for selling and distribution? It is 25% of cost of sales. So this is again 25% of cost of sales. So let this be 100. This is 25. So now this becomes 75. So this 16666 is now 75. So how much is 25? Can someone give me the answer? Acha, 555533. So, how much is now cost of sales? Just two. Correct. 4. Achha, okay, this is also 6. Correct, no? Okay. This is the case. I think this should become a round figure, no? Just confirm, students. I think this will make it a round figure. What is given for profits? 25% on sales. So 1/4 of sales is equal to 1/3 of this. So you can take 1/3 of 2, and adding that will give you the sales. How much it comes to, students? 7407. Perfect. Two 96, 2933. Right, students? Two nine six two nine 2969.33. Perfect. Great. So see, these are some 3 marks questions you can say, which you may expect on cost sheet, which has different flavors. Some are mathematics driven, some are simple calculations driven, right? Now, let me take you to another interesting question. This one. Chalo, read the question so that before I can take you to the answers, you should first read and understand what the question is all about. So, what it says, the Bata company has 2 types of products, product A, product B. The details for the year ending is material, labor, overheads. Now, this is not of any of the product, it is of the company as a whole. There is no WIP stock. Now it is ascertained that this is the main part why this question we are dealing with is that the direct material for type A shoes is twice of type B shoes. Correct now? This is what is given. Similarly, the direct wages of type A shoes is 60% for, sorry, direct wages of type B shoes is 60% of type A shoes. ठीक है? Production overheads is same per pair of A and B. ठीक है? Administration overheads, which is related to production, is 150% of wages. Selling is 1.5 per pair. Production during the year, type A shoes 40,000, out of which 36 is sold. Type B shoes 120, out of which 1 lakh is sold. Selling prices are great, straightforward. Na? Chalo, I give you 5 minutes. Just give me figure up to prime cost first. Because if that is correct, we proceed further. Give me your answer only up to prime cost. Many times when you are reading a sum, what appears on the face of it may be different when you start solving. Nanda Kishore has given me prime cost. Good. I'll just give you an interesting, what you can say, insider information. If you're getting the answer so fast, it is wrong. Just a tip. So Shippy Mall has also given me an answer. If you're getting answer so quick, it is wrong. That is where the key to reading the question comes. Read it again, minutely. What appears to be a calculation or oral calculation is actually not. There is some mathematical working involved. See if you are getting that. Did you get something? Tell me, students, did you get something, that specific point which changes the answer? Okay, I have new inputs, I think. Yeah, it is 60%. You're right. Students, read minutely. Very good, Anurag. You got the point. Vannan has given me another answer. Good. Let's see whether it works out. Chalo then. See, what is given is direct material per unit. What many of you all were doing? You are applying this ratio of twice on the total material cost. Means you are considering it as 2:1. Similarly, in case of labor also, you are considering it as 1:0.6, but that you are applying to the total. However, the language says it is per unit. This is where the whole answer changes. So let's see. So now this is the case of product cost sheet. Correct? Particulars, type A, type B. We have production units of both. How much it is? Of A it is 40 pairs, of B it is 120 pairs. Correct? Direct material, direct labor, prime cost, production overheads, cost, it is factory cost. Correct? Then you have let us first complete up to this stage. So working note 1, calculation of direct material cost. Now here the language plays the key role. What have they said? They have said that the direct material per unit of A consists of twice as much as that of direct material per unit in B. So let direct material per unit of type B shows be X. Therefore, direct material of type A shows has to be 2x. Right now? Now, total direct material is direct material of A plus direct material of B. Total direct material is 15 lakhs. Now, how much would be direct material of A? It is 40,000 pair multiplied by A is 2x plus 1,20,000 pair multiplied by B is x. So I get a simple equation of maths. Now this is 80,000, this is 120. So this becomes 2 lakh x. Therefore, x is equal to direct material per unit of B is equal to rupees 7.5. 2x, which is direct material per unit of A, will be rupees 15. Now it matches with the language because the ratio of 1:2 is for the per unit material and not the total material. Correct? So 15. Now we have to find out total. So this will be 6 lakh because 15 into 40,000 pairs will give me total material cost and 7.5. Correct now? Nine lakhs. Right? Then students, now similar lines. Calculation of direct labor cost. Now what is the language here? The direct wages per unit, again it is per unit of B is 60% of A. So here let direct labor per unit of type A shows Px. Therefore, of type B shows will be 0.6x. Same equation, total labor cost is labor cost of A plus labor cost of B. How much is total? Total is 840. Quantity of A is 40,000 into X. Quantity of B is 1,20,000 into 0.6x. See, formation of equation plus using the right values. So X is multiplied by 40,000 because this is for A, and 0.6 will be multiplied by 1,20,000, which is for B. So this is 40,000 X, this is 12 6 are 72, 72,000 X. 72 plus 42 is 1,12,000. Correct, na? X. Therefore, tell me students how much would be X? which is direct labor per unit of A. Direct labor per unit of Anurag has given me, I think, an answer. 7.5 and 4.5. This is what Anurag tells me. Same as Manivanan telling me. So 7.5 again into 40,000 will be total, into 1,20,000 would be total. So I think it is coming as 3 lakhs for A. The total cost. $45, 9, 5.4, 540. Correct? Students, please recheck for me. 540. Yes. So Manivanan has confirmed my answer. So 9 lakhs and 14 lakhs 40,000. So we reach up to prime cost. Now the next working calculation of production overheads. What is there for production overheads? Production overheads was same per pair again. It is same per pair of A and B. My total production is 360. Let production overheads per pair be X. Now it is same for both. So total production overheads is equal to production overheads of A plus production overheads of B. How much it is? 360. X. Correct, no? Because it is same per pair. So 40,000x, 120x is equal to 160x. So 360 is 160x. Therefore, x, which is production overheads per unit of A and B both. 16 twos are 32. 2.25. Yes, students. Is it 2.25? Anurag has confirmed. Manivanan has also confirmed. So for A, it is 2.25 into 40,000. And for B, it is 2.25 into 120. 4 twos are 8, 10, 90,000. Correct? And 270. Yes, Apurva has confirmed. Shifimol has also confirmed. Manivanan has also confirmed. So 90, 270. Correct, students? I hope we are in sync. Okay. Things going well till this point. No issues with anyone. No disputes. Okay. Now what is given further? Administration, which is related to production for each type, is 150% of wages. So this is easy. So I have to simply take direct labor multiplied by 150%. So what is my direct labor? My direct labor is 3 lakhs. Okay, let me show the working here. So it is 3 lakhs into 150. And here it is 540 into 150. 540 half is 270, 270. So 810. Am I right, students? Yes, Apurva has confirmed. Anurag confirms. Manivanan confirms. Okay, excellent. So this gives me my cost of production. 9. So 1440 I'm getting here and 2520 I'm getting here. Now comes the most interesting adjustment is of stocks for the first time plus opening finished goods stock, closing finished goods stock. So I will get cost goods sold, to which I will add selling and distribution overheads. So I will get my cost of sales. Now, from where do I get this stock? If you read again the question minutely, it says production during the year 40, but the sales is 36. Again, production year 120, but the sales is 1 lakh. So this shows that there is some difference between production and sales, which obviously is stock. Now, as far as the entire question is concerned, nowhere we get any details of opening. But one thing is for sure, since production is more and sales is less, definitely you have closing. Correct? Okay, let me give markings for working note 1, 2, 3. So this is 4. So what is this working note 4? Valuation of closing finished goods stock. It is cost of production, correct, upon units produced into closing stock units. So simple formula, students. This is my cost of production divided by units produced. That gives me average cost of 1 unit multiplied by units which are lying in stock. So type A, type B. So what are the details? The cost of production is 1440. Production units are 40,000. And here it is 2520 and production units are 120. Right? Now, how much is in stock? So out of 40, 36,000 is sold and there is no opening. It means 4,000 will be your closing. And out of 120, 1 lakh is sold. Again, no opening. So 20,000 is in stock. So 4,000 and 20,000 is your stock position. So this I get as 144. Correct now? And this is 1/6. 6 4s are 24. 420 I am getting. 6 2 is 12. So 144 and 420. Students, please confirm. Okay, Manivanan confirms. Apurva confirms. Anurag. Nandakishore. Acha, he has given me COGS. Wow, that's great. 144, 420 is firstly my closing stocks. Now remember, it is negative. Huh? So now what I'm left over here is 21 lakhs. And here what I'm left is 1296. 1296 and 21 lakhs. Correct. Great. Now the last thing that is left is selling overheads. Yes, it is here. So selling is 1.5 per pair, right? Students, these are selling overheads. So rupee 1.5, which is per pair selling overheads, multiplied by units sold, because selling overheads cannot be charged for production units. Correct, na? Purva has given me some answer. So 36 and half of 36 is 18. Okay, Apurva has given me this amount. Fine, Apurva. Great. So I get 1350 as my cost of sales here. 2250 as my cost of sales here. I'm given my sales value, means I can derive selling price into units sold. So I will get my profit. Correct. 36,000 units, 1 lakh units. How much is the selling price, students? Yes, it is 44 and 28. So this is 28 lakhs, correct? So the balancing figure profit would be 550. 16. 16. So 10% count. So 1440 is 10% of 1440. 1584, if I'm not wrong. Just confirm, students. Wow. 1584. Super. Confirmed by so many of you. Excellent. ठीक है. So it is 234 and 550. So students, see, what appeared as a simple mathematical question turned out to be a really detailed mathematical question. Correct? Is this fine, students? Anybody, any questions or doubts in this? I hope we have covered every part of this question. Nothing is missed out. Yes, according to me, everything is covered. Students, any further doubt in this chapter, or for that matter, any other chapter in costing? We can take up your queries as we have some time left. Students, tell me. No doubts? So everything is through till now in all topics of costing? Yes, all questions that we did today, I tried to cover all possible varieties, starting from this conceptual type of question, then moving on to this question where we tried to first understand the basic format and then the costing. Then moving on to this construction company, which was a merger of cost sheet plus ABC, where we also gave a strategy depending upon the requirement and the details given. Then we went to a batch costing sum, where we identified what could be the cost of this order. And then we moved on to some mathematical driven questions. This one was pure maths. This one, both these were having simple back calculation mathematics with some missing figure. Yes, Nanda Kishore has a very good question. Sir, in question 3, which is the batch costing question, this one, he's saying, once we have done setup of the batch, I think, but you are talking about not 3, you are talking about 4. Yes. So he's saying, once I've done this batch setup cost, why will I incur it again? So, but it is important to understand that how this batch setup cost is incurred, whether it is incurred per batch or whether it is incurred one time. Setting up cost is required for every batch. Now, when you receive order of 2400 pens, which is 20 batches, it is not that by doing setup once you will be able to produce all 2400. The language of the sum suggests that in one batch you can only make 120 pens. So it is not that one setup will run for any number of pens. Here, the setup cost or the data is so given, which means, at least in this question, that the setup is required for every batch of 120 pens. So it is not that you will be able to produce anything beyond 120 in that batch. So let us say it is type of a die which gets wear out after 120 pens. So you have to change the die. So that is how the cost is. And that is why we did not consider it only once. We considered it 20 times by multiplying it by 20 batches. But what you are saying, Nanda Kishore, is also correct. If in any other question where the question language is such that the setup cost is incurred once, irrespective of number of pens, then what you are saying will be applicable. We will consider the batch setup cost once. But here, the language suggests that this cost is recurring after every 120 pens. As I gave you example, it could be some mold or die or jig, which gets worn and torn after every 120 pens. So you need to compulsorily replace it with a new mold, die, etc. Fine? Great. So students, with this, we conclude our today's revisionary class, and we have covered all possibilities of cost sheet, different varieties. Kindly refer to all our past exam questions, the MTPs, RTPs, which are available on our portal, and do a thorough practice of the subject. I assure you, with a systematic practice of this and even the other subjects, you will definitely will crack the upcoming exams. So thank you all and keep studying hard. Manishji, over from my side. Good day, Manishji. Bye bye.